Buying a home has never been harder. Bidding wars, cash offers, and disappearing listings. But what if it's not just bad luck? What if Wall Street is the reason? Today we're breaking down how hedge funds are taking over the housing market and destroying the dream of homeownership. For decades, housing was about families building stability and wealth. Now, hedge funds and big investors are buying homes by the thousands, not to live in, but to rent out. Their billions in cash have reshaped the market, making it harder than ever for regular buyers to compete. After the 2008 crash, hedge funds saw opportunity where families saw loss. They bought up foreclosed homes cheap, turned them into rentals, and now own tens of thousands of single-family houses. By 2024, nearly 1 in 5 U.S. homes sold went to investors, and 1 in 4 affordable homes. So when you lose a bid, odds are it's not another family. It's Wall Street. They win by using all-cash offers, skipping inspections, and closing instantly. Sellers love it. Families can't compete. This drives up prices across entire neighborhoods. Most hedge funds target starter homes, not mansions, the same homes young families need. Once they buy, they rarely sell. Instead, they rent them out indefinitely. These homes are turned into corporate rentals managed by massive property companies. Tenants describe them as faceless landlords. Rent is automated, evictions are instant, and maintenance is often ignored. A Harvard study found rents rose 11% nationwide, even higher in investor-heavy cities. Some call these firms corporate slumlords. Large-scale investors inflate home prices and rent, feeding housing inflation and inequality. Homes stop being a place to live. They become financial assets for the ultra-wealthy. After 2008, Wall Street bought low. Now those same properties are worth double, enriching investors while millions of families were priced out of the recovery. Nationally, hedge funds own less than 1% of all homes. But in cities like Atlanta, Phoenix, and parts of Texas, they dominate entire neighborhoods. When one company owns hundreds of nearby homes, they control local rents and supply. These houses rarely return to the open market, locking entire communities into renting cycles that build corporate wealth instead of family equity. Some analysts argue hedge funds aren't the root problem, just a symptom of it.
Most people want to get into real estate but get stuck before they even start. They waste months watching YouTube videos, buying the wrong courses, or chasing strategies that don't work anymore. But what if there was a shortcut, a proven roadmap that takes you straight to your first wholesale deal, even if you've got zero experience and zero money to start? Do you want a step-by-step guide to cracking the code to real estate wholesaling? It's not another overcomplicated course or boring theory book. It's a mini blueprint that shows you exactly how to find and flip undervalued properties using low-cost, high-profit strategies no one else is talking about. No buying lists, no ugly bandit signs, no license or big investment needed, just fast deals, low risk, high profit. Inside you'll discover how to find hidden, undervalued properties before anyone else, the secrets to closing no-money deals, even if you're broke, how to generate and convert leads fast, and how to close profitable deals without ever owning a property. This ebook mini-course is designed to get you results in weeks, not years. And when you grab your copy today, you'll also get 3 exclusive wholesaling contract templates absolutely free. Your JV contract, sales contract, and assignment of contract, ready to plug in and start using immediately. That's real tools, real templates, and real results. So if you're serious about breaking into real estate and actually closing your first deal, stop waiting and start wholesaling. Don't overthink it. The only thing standing between you and your first deal is action. Click the link in the description, download the wholesaling shortcut, and start turning opportunities into profits today.
Years of underbuilding and low interest rates created a housing shortage, and Wall Street simply capitalized. Others note that build-to-rent neighborhoods technically add supply, though they do nothing to help people buy homes. Either way, the outcome is the same. Home ownership is slipping away from average Americans. If this continues, the future looks bleak. More Americans will rent, not by choice, but because they're priced out. Communities lose stability when neighborhoods are owned by corporations. Decisions about rent, maintenance, and evictions are made in boardrooms, not by neighbors. The wealth gap widens as ownership consolidates among the wealthy few. Possible solutions include limiting institutional ownership of homes, incentivizing owner-occupiers, regulating corporate landlords, building more affordable housing. Some cities are already pushing back, but without national reform, Wall Street will keep expanding its control over housing. The dream of home ownership is fading. Hedge funds didn't start the crisis, but they've made it worse. Until the balance shifts back toward families, housing will stay a playground for billionaires, not a path to the middle class. So next time you lose a bidding war, remember, you're not just competing with another buyer, you're competing with Wall Street. If you found this breakdown eye-opening, hit like, subscribe, and tell us in the comments, should hedge funds be banned from buying homes?